All right, so today we're diving into the Bank of New York Mellon Corporation, BK.
Okay, yeah.
And you've brought some really in-depth research on them. Plus, we've got their latest earnings call from Q4 2024. So I'm thinking we use that to really break down like what's going on with this company.
Yeah, absolutely. I think that's a great way to approach this.
We'll look at their, different businesses, the competition they face, how they plan to grow, all the risks and roadblocks, and of course, their recent performance, and what we might expect going forward. It's like a crash course in BK.
I like it. A crash course. We're going to take all that info you've got and distill it down to like the essential stuff.
Yeah.
Give everyone listening a clear picture of like what BK does and the whole scene they're operating in. So maybe the best place to start is like their core business.
Yeah, let's start there. What is it that BK actually does?
Well, at the highest level, they're a global powerhouse in custody and investment services, like seriously massive. And what's interesting is the bulk of their revenue, it's not from trading or anything like that, it's from fees for those services.
Yeah.
And their client list is vast, from, the biggest asset managers all the way down to individual investors.
Wow. Okay, so break it down for us. What are the main parts of this business?
Sure. So there's this thing called investment servicing. It's kind of the heart of what they do. And a big chunk of that is their assets under custody and administration, or, AUCA. Now get this, that number is a staggering $52 trillion.
52 trillion. That's like what, more than most countries' GDPs combined?
It's a truly mind-boggling number. And that includes, your typical asset servicing for like pension funds, endowments, that kind of thing. But there's also a lot of action in fund services. And what's really caught my eye is the growth in their ETF servicing business. AUCA there is up a whopping 60% year over year, sitting at $2.8 trillion. That's a real sign they're in the right place as ETFs keep booming. Plus, within investment servicing, you've got alternative investments, data solutions. It's a whole world.
Okay, so it's not just holding on to these assets. They're actually doing a lot more. What else is there?
Yeah, so you've got issuer services. This is where they deal with corporate trust stuff, those American depository receipts, or ADRs. It's basically how investors can more easily buy shares in foreign companies.
Right. Makes it all more accessible.
Exactly. And then there's clearance and collateral management. Now, this one's a little less flashy, maybe, but it's crucial to how the whole system works. BK is the biggest clearer of U.S. government securities. They handle trillions of dollars in what are called tri-party repo balances. Think of it as short-term loans backed by government securities. And because they clear so much of this volume, it shows you how central they are to, like, the nuts and bolts of finance. Oh, and they also handle settlements for equity and fixed income trades, making sure everything gets where it needs to go after a transaction.
So they're like the traffic cops of Wall Street, making sure everything flows smoothly.
I like that analogy. Yeah, they keep things moving.
All right, so what about, what was it, Treasury services? That was the last part of investment servicing, right?
Right. Treasury services. So that's where they process payments. And we're talking about an average of $237 billion daily, both for big institutions and regular companies. They even recently snagged that U.S. Treasury Direct Express program. Pretty big deal.
Wow. 237 billion a day. That's just a huge amount of money flowing through their systems. Okay, so we've got investment servicing. What's next?
All right, so the next big area is market and wealth services. This is where they're more focused on distribution, like getting investment products and services out to wealth managers and institutional clients. And a big part of this is their Pershing platform. It's a leader in custody for those registered investment advisors, the RIAs, and also provides clearing services for broker-dealers, plus a bunch of digital solutions. Pershing actually had a killer fourth quarter in 2024, raking in $41 billion in net new assets. That's serious growth.
41 billion just in one quarter. Yeah, that's definitely some strong growth there.
Yeah.
So what else is under that market and wealth services umbrella?
Well, they've also got their wealth management division, separate from Pershing. This one's all about customized solutions for those ultra-high net worth individuals, the UH&W folks, and then your high net worth H&W clients. Here in the U.S., they manage around $3 trillion in wealth client assets, and they're really leaning into serving that faster-growing ultra-high net worth segment. And then you've got collateral platforms, which are more for institutional clients, providing solutions globally.
So a few different flavors of wealth management catering to different needs.
Right. And then the third main area is investment and wealth management. This is where they're really driving growth through advisory services. So there's asset management, where they have about $2 trillion in AUM assets under management spread across 7 different boutique investment firms. And then there's another side of wealth management here, but this time it's super personalized for those UHNW individuals and family offices. So you see, they're approaching that wealth management market from slightly different angles.
Yeah, it makes sense. Different strokes for different folks, as they say. Now, what about technology? It seems like that's becoming more and more crucial for everyone, especially in finance.
Oh, absolutely. Technology is no longer just some back office function. It's like front and center in their value proposition now.
Mm.
So they've got this platform called Wove, specifically for those RIAs we talked about. They've already got 36 clients using it. Another 41 have signed contracts, and they're projecting it'll bring in something like $60 to $70 million in new revenue in 2025. That's nothing to sneeze at. Plus, they've got other key platforms like collateral loan, and they're working on next-gen platforms for ETFs and custody services. And, you can't forget about the whole digital asset space. They're pretty active there, actually servicing most of the digital asset ETFs in the US and Canada.
Oh, that's interesting. So they're really getting ahead of the curve with that whole digital asset revolution.
Right. Trying to be at the forefront of that whole, evolution in finance.
Makes sense. So last piece of the puzzle, we've got their net interest revenue, the NII. Not a separate business exactly, but definitely impacts their bottom line.
For sure. So NII comes from interest earned on their, interest earning assets, things like deposits, securities lending. It's a significant contributor to their overall performance.
Okay, so that's BK in a nutshell. Diverse, huge, and clearly deeply embedded in the global financial system. Now let's talk about the competitive landscape. Who are they up against, and what are their strengths and weaknesses?
All right. Well, first off, BK has some serious competitive advantages. I mean, they're the largest global custodian, $52 trillion in AUCA. That scale gives them some major cost advantages. Plus, it's not exactly easy for clients to just up and leave with that amount of money. That's what we call high switching costs. It's like a built-in moat protecting their business.
Yeah, I can imagine the paperwork alone would be a nightmare. So scale is one thing, but are they keeping up with the times? What about technology?
Yeah. So on that front, they've been pouring money into tech advancements, something like $1.8 billion in 2023 alone, just on software and equipment. That's what's led to those platforms like collateral loan, Wove, and others. They're not sitting still.
And their business isn't all in one basket, right? Doesn't that help them compete?
Definitely. Their diversified revenue streams are a huge plus. All those different segments we talked about, it spreads the risk, makes them more resilient. Plus, their cost and efficiency advantage, thanks to their scale and that platform operating model they're building, translates into strong profit margins. They actually saved $500 million in 2024 just through digitization efforts.
$500 million in savings. That's impressive. And yeah, the switching costs, those are a real barrier for anyone trying to steal their customers. But it can't all be sunshine and roses, right? What are some of the headwinds they're facing?
Right. Well, fee compression is a constant pressure. It's just an industry-wide thing. Clients are always pushing for lower fees, and that can squeeze profits, even for a giant like BK. And another thing, about 3/4 of their revenue is tied to market performance. We call it market sensitivity. Basically, when the stock and bond markets do well, their fee revenue tends to climb. But when markets tank, well,
Yeah, that makes sense. It's hard to escape those market swings when so much of your business is linked to asset values.
Exactly. And even though they're the leader in custody, they do face competition. There have been cases where they've lost clients, and there's always the risk of clients spreading their assets across multiple custodians. Like BlackRock recently reduced their reliance on State Street. It happens.
So diversification can be a double-edged sword, I guess. Good for BK, but their clients can diversify too.
Yeah, that's the game. And, there have been some bumps in the road with integration, especially after that big Bank of New York and Mellon merger. Plus, there's been a bit more management turnover than some of their peers, which can make people a little uneasy. And because they're so central to how securities settle, they're exposed to some pretty heavy operational risks, cyber attacks, regulatory scrutiny, all that. It comes with the territory.
So big rewards, but big risks as well. Speaking of competition, who are the main players BK is going head-to-head with?
Sure. So in terms of size, their closest competitor is State Street, ticker STT. They've got about $38.8 trillion in AUCA. Their alpha platform is a big selling point, offers a bunch of integrated solutions, and they're really strong in the ETF servicing space. But they are quite tied to the stock market, so that's a vulnerability. Yeah. And they did lose some big mandates like BlackRock's iShares ETFs. That was a blow.
Ouch. Okay, what about Northern Trust? NTRS, I think.
Yeah, NTRS. So they're a bit more niche, focusing on ultra-high net worth individuals and institutional clients. Smaller scale, less diversified revenue, and they've been slower to adapt to new tech. Sort of a more traditional player.
And what about the big banks like JP Morgan, Citi? Do they even register on BK's radar?
Well, they're in the game, for sure. Their custody businesses are part of their larger banking operations. So they get those cross-selling opportunities, and they've got a strong presence in global and emerging markets. But custody is their main focus, not like it is for BK and State Street. It's more of a side hustle for them, relatively speaking.
Interesting. So they're players, but not playing the same game exactly. And how's BK doing in terms of like keeping up with the latest tech? You mentioned blockchain, AI, all that.
Yeah, so when it comes to that cutting edge stuff, BK seems to be ahead of the pack compared to like Northern Trust and Citi. They're investing in blockchain, AI, digital asset services. State Street is more comparable. They've got their alpha platform and are pushing innovation there. It's a tight race.
So overall, where does BK stand in this competitive arena?
Overall, they're in a pretty strong position. I mean, the scale is a huge advantage. Their diversified business model helps, and they're not afraid to invest in new tech. But they've got to stay on top of those fee pressures, and the competition for clients is always fierce.
It's a constant battle. So given all that, how does BK plan to grow? What's their strategy?
Well, they've got a multi-pronged approach. One of their key focuses is what they call platform evolution. It's this huge shift they're making to a platform-based operating model. They want 80% of their employees aligned with this model by the end of 2025. It's a massive undertaking, but the idea is to streamline everything, make client engagement smoother, and ultimately drive both efficiency and revenue growth. They call it 1BNY.
One BNY sounds like a big cultural shift as much as anything else.
Yeah, it really is. And they're not just stopping at internal changes. They're also laser focused on fee-based growth. They're aiming for mid-single-digit growth there, mainly through cross-selling to existing clients and deepening those relationships. Actually, they've seen a 30% jump year over year in sales from clients using 3 or more of their services. So that cross-selling strategy seems to be working.
If you've already got a happy customer, why not sell more, right? Makes sense. Now, what about their wealth management ambitions? We talked about those different segments they're targeting.
Yeah, wealth management expansion is a big part of the plan. They're using Pershing for RIAs and broker-dealers and BNY Wealth for those ultra-high net worth individuals. And remember, they're already managing $3 trillion in wealth assets. So there's a lot of potential there, especially as that UHNW segment keeps growing.
And with the way the investment world is changing, people wanting access to more sophisticated products.
Right. That's where their ETF and alternative investment services come in. Remember, their ETF AUCA is up 60% year over year, and alternatives are growing too. They're riding that wave.
Smart move. And we
Yeah.
can't talk growth without talking tech, right?
Absolutely not. Digital and AI investments are ongoing, nonstop. They're pouring money into AI, digitizing everything they can, building platforms like collateral loan. And that Wove platform, they're expecting big things from that in terms of revenue from RIAs.
So they're covering their bases. Any specific business lines they're looking to expand?
Yeah, they're looking at treasury and payments expansion, building on that $237 billion a day in payments they're already processing, and leveraging wins like that Direct Express program. They're also early movers in the whole alternative assets and digital transition space. They see the potential there for the long haul.
Okay, so a lot going on. How does all this compare to what their competitors are doing?
Well, State Street is all about their alpha platform. They're pushing outsourced CIO services, leading the charge in ETFs, and they're big on ESG investing. Northern Trust is doubling down on wealth management, particularly the ultra-high net worth folks, but they're moving slower on tech and sticking to a more conservative approach for their institutional clients. JP Morgan and Citi, they're leveraging their global reach for custody and treasury services, using tech to streamline transactions, but custody is still like a secondary priority for them.
Okay, so everyone's got their own playbook. What's your take on BK's plan? Got a good chance of success?
I think they've got a good shot. Their scale, those sticky client relationships, the tech investments they're making, the demand in areas like ETFs and alternatives, it's all working in their favor. And that platform model should boost margins eventually. They've laid out some pretty detailed execution plans, and they've had some early wins with the platform and tech adoption. So yeah, I'm cautiously optimistic.
Cautiously optimistic. I like that.
Yeah.
But no plan is foolproof. What are some of the things that could trip them up?
Well, the elephant in the room is fee pressure. It's not going away, and it can easily eat into any revenue growth they get from higher volume or new services. And clients They're always looking for the best deal, so BK has to worry about them diversifying, maybe going with multiple custodians. Competition is heating up, especially from those tech-savvy players like State Street with their alpha platform. And you can never ignore the macro environment. Market volatility can hit their AUCA and AUM hard, which means less fee revenue. And then there's the execution risk. They're making some big changes with this platform model and all the AI stuff. If they stumble there, it can be costly.
Yeah, lots of moving parts, lots of potential pitfalls, so lots for investors to watch.
Exactly. It's a mix of opportunity and risk.
Mm-hmm.
Their diversified approach and focus on tech give them a strong base, but they've got to execute flawlessly and keep ahead of the competition. That's the challenge.
All right, so let's shift gears a bit and dig into some of the nitty-gritty details. Execution risk.
Yeah.
What exactly are the main things that could go wrong as BK tries to implement their strategy?
Right. Well, the most immediate one is the platform transition. It's a huge change, organizationally and operationally, getting 80% of employees onto this new model by 2025. They've got to pull it off without disrupting services to their clients. That's a tough balancing act. Yeah, if they mess that up, clients could start looking elsewhere pretty quickly.
For sure. And then there's the technology side. They're investing a ton in AI and platforms like Wove, but those have to be deployed successfully. People need to use them. They've got to integrate with existing systems. It's not just about spending money. It's about getting a return on that investment.
It's easy to throw money at a problem, much harder to actually solve it. And we've got to talk about fees again, right? I mean, it keeps coming up. It does, because it's a real issue. If fees keep getting squeezed, that could wipe out any revenue gains they make elsewhere. It's like a constant headwind they're fighting. Plus, there's been more management turnover at BK than at some of their competitors, which just adds a layer of uncertainty. And you've always got that client diversification risk hanging over them. A few big clients decide to move their assets around, and that could really hit their revenue.
So they're walking a tightrope, basically. How do their risks stack up against their competitors?
Well, State Street is pretty tied to the success of their alpha platform, and they're vulnerable to losing clients. Northern Trust's risks are more about their size and slower adoption of technology. And for those big banks like JP Morgan and Citi, their challenge is integrating custody with their other banking stuff and managing the risks that come with being so global.
Okay, so different risks, but risks nonetheless. It seems like DK is in this transformational phase. Big potential, but big risks too.
That's a good way to put it. High near-term execution risk because of this platform shift. But if they can nail it, it could really solidify their position for the long run.
All right, let's move on to their recent performance. What were the key takeaways from their Q4 2024 earnings call? What jumped out at you?
Well, overall, 2024 was a banner year for them. They hit record net income, $4.3 billion, record revenue of $18.6 billion. Their return on tangible common equity for the year was a healthy 23%. Those are some big numbers.
Yeah, definitely some bragging rights there. What about efficiency and profitability? How did they do on that front?
They reported positive operating leverage of 968 basis points for the year, which is really good, or 288 basis points if you take out some one-off items. What's really encouraging is that fee revenue was up 6% year over year, and their net interest income, NII, was only down 1%, way better than their initial prediction of a 10% drop. That's something to keep an eye on.
Yeah, beating expectations on NII is always a good sign. And they managed to control costs.
Yeah, their expenses were down 4% for the year, and even if you exclude those one-off things, they were only up 1%. So they're keeping things tight. And they also returned a whopping 102% of their 2024 earnings to shareholders. That's a sign of confidence.
Definitely shareholder friendly, that's for sure. And what about their Q4 specifically? How did they close out the year?
Q4 was strong too. Total revenue up 11%, fee revenue up 9%, NII up 8% year over year. Their total AUCA hit $52.1 trillion, up 9% from the previous year. AUM was at $2 trillion, up 3%. And remember Pershing. They brought in another $41 billion in new assets just in that quarter. Plus, they snagged that Direct Express program from the Treasury.
So firing on all cylinders, it seems like. What's the outlook for 2025? What are they saying?
The guidance is pretty positive. They expect positive operating leverage again. NII should be up mid-single digits, fee revenue should grow too, and they're projecting expense growth of just 1 to 2%, excluding any unusual items. And they plan to keep returning around 100% of their earnings to shareholders, give or take.
Sounds like they're expecting another good year.
Yeah.
Did they talk about any specific market trends that are shaping their outlook?
Yeah, they did. They highlighted growth in treasury services, clearance and collateral management, and corporate trust. I see those as linked to the overall economy and activity in the capital markets. They're also bullish on the U.S. wealth market, particularly through Pershing and BNY Wealth, especially that ultra-high net worth segment. And they see opportunities in the trend towards outsourcing investment management and the growing interest in private markets. Plus, there's that whole digital asset ETF boom. They're right there in the thick of it, offering services for most of those ETFs.
So they're staying ahead of the curve, and you mentioned that platform transition earlier. How's that coming along?
It's moving right along.
Mhm.
They expect to have more than half their employees on the new model by the end of March 2025. They're also investing heavily in AI, both for efficiency and to drive new revenue. It's a core part of their strategy.
Okay, so lots going on, lots of moving pieces. For someone who's trying to make sense of BK and where they're headed, what are the key things to watch? What will tell us if they're succeeding or struggling?
Right, so there's several things to keep in mind. First, those fee trends. Fee compression is a constant threat, and it could really hurt their profitability if it keeps going. Second, their platform transition. They've got to execute that flawlessly. Any hiccups there, and it could impact everything from their cost savings to client relationships.
So internal execution is critical. What about the external environment?
Yeah, so the competitive landscape is always shifting. They've got to watch out for State Street, Northern Trust, and any new fintech players that pop up. Client diversification is a risk too. If clients start spreading their assets around, BK could lose market share. And then there's NII, their net interest income. It's sensitive to things like deposit mix and interest rates, so those factors can really impact their earnings in the short to medium term.
And of course, you can't forget about the market itself.
Right. Market valuations and volatility, they have a direct impact on AUCA, AUM, and ultimately their fee-based revenue. Those are things everyone needs to track, not just BK. And then there's the whole growth story. Can they capitalize on the growth in ETFs, alternative assets, and the shift to digital? That's a big question mark.
Yeah, being in the right place at the right time is only half the battle. You've got to be able to execute too. What about things like, regulations, geopolitics? Do those matter?
Definitely. The regulatory environment is always a wild card. Changes in capital requirements, cybersecurity rules, digital asset regulation, those can all impact BK's business. And how well their wealth management businesses do, Pershing and BNY Wealth, that's another indicator to track. And finally, their tech strategy. Can they actually deploy and monetize those AI solutions they're investing in? That's crucial for long-term success. Oh, and on the geopolitical front, any major disruptions, conflicts or whatever, could mess with global financial flows, which would have ripple effects for everyone, including BK.
So lots to keep an eye on. It sounds like BK is at a pivotal point. They're trying to transform themselves, but there are tons of challenges along the way.
Yeah, it's a really interesting time for them. Their move to a platform-based model and all that investment in technology, especially AI, that seems to be their big bet for driving efficiency and growth. It's a gamble, but it could pay off big time if they can pull it off.
So as we wrap up this deep dive into DK, it's clear they're operating in a complex and dynamic landscape. From the macro environment to the competitive pressures to their own internal changes, there's a lot to consider. What stands out to you as the most important thing to watch as BK tries to navigate this new world of finance? This content is produced by Compasscope.com. For more than 1,100 public listed companies, find detailed research reports, visual mind maps, earnings call analysis, and audio discussions on Compasscope.com.